Welcome and good morning, everyone. So pleased you can join us here for Surrey Boards of Trade Digital Impact Learning Labs. My name is Rowena Rosati. I'm a board director for the Surrey Board of Trade, and I'm also the vice president of healthcare and innovation for the LARC Group in the Health and Technology District. Before we start, I'd like to acknowledge, pardon me, that we are on the traditional territories of the Tsawwassen First Nation and the unceded territory of the Coast Salish peoples, specifically Kwantlen Katsi and Semiahmoo First Nations. Surrey Board of Trade is here to support existing businesses within the city of Surrey and also to attract new businesses into Surrey, and provides a multitude and plethora of resources to support our businesses in our fine city. In addition, Surrey Board of Trade advocates for businesses and the success and the viability and sustainability of businesses, including advocacy at all levels of government, but primarily with resources that support our businesses for their success. So today, Digital Impact Learning Lab is one of those resources we're bringing forward to the businesses today. So in order to facilitate our morning and the discussion that we'll have this morning, I'd like to introduce Manny Gruel, who will be our facilitator this morning. And Manny is the Regional Director of Field Services for Western Canada on behalf of RBC Insurance. Over to you, Manny. You're muted, Manny. Oh, we need you to take your mute off.
Oh,
there
yeah,
we go. There we go.
Thank you, Rowena. And thank you to the Surrey Board of Trade for the opportunity to connect and share ideas with our business community out here. Right? Surrey Board of Trade is a great organization, a great platform looking out for the best interest of the business community. Entrepreneurs, small business, they're the backbone of our community. And as you all know, RBC has strong ties within the community and the business community, and that is why we thought we'd come forward and just share some ideas. Okay. As Rowena mentioned, my name is Manny Grewal. I'm the regional director, and today I'm joined by my co-presenter here, James McMullen, senior insurance and wealth specialist with RBC Insurance. And then manning the chat will be Trish Herrera, our senior consultant at RBC Insurance. Now, we're here to share information on managing risk to the most important assets in your business. Your employees, business partners, and of course yourself, the human capital of any business. Now, when we think about business risk management, there's two aspects to it. There's the business operations and then the human capital. The operations, most business owners are aware, familiar with the political risk that they have to deal with, currency risk, supplier risk, or maybe a risk of a person falling on their premises, risk of fire, water, theft. These are the, when we think about risk, this is typically what comes to mind. Now, on the human capital side, the risk is just as severe, okay? A risk to the business owner, a partner, a key employee are typically not top of mind, okay? And often put on the back burner. So today we will be discussing, this will be the topic of our discussion. The discussion will be general in nature, so please reach out if you want to discuss your specific situation, or if you would like a handy guide to see what sort of issues need to be addressed. Okay. So next, we'll, the agenda, it's, we'll be going over the 4 Ds of risk, the impact of a risk occurrence. We'll go through some numbers, some probabilities, looking at, hey, what are the probabilities of these risks occurring? Look at your options, and then we'll be looking at 5 strategies that you should be considering to mitigate these risks or the impact of these risks. And finally, we'll finish off with questions. Okay, next. So the 4 Ds of risk. they deal with, business owners and entrepreneurs are risk takers, often devoting their lives to their business. If a risk event occurs, it's important for them to look after, to protect themselves, their lifestyle, family, and the business. Now, what can impact this business is death of an owner, partner. Questions might come up: who gets the share? If somebody else inherits the shares, what do they know about business? How does the remaining partner retain control? So these are the type of issues that come up. Okay, death of a key employee. What happens, if that employee's skill set, their technical knowledge is the driving source of revenue? How do you find and train a new person in their absence? What will be the impact? Same thing, so that's death. Same thing could happen with a disability, whether that's caused by an illness or a serious injury. So these are the risks that need to be mitigated. Other things, and the other risks, the other two Ds, can also have a huge impact. Divorce. What will the court decide? Who will get the shares and at what price? These are things, if you can plan ahead, make the transition or the impact of these risks lowers the impact. And then there's departure. What if a shareholder, majority shareholder, or a partner wants to leave? They're no longer interested in the business, or they want to retire. They've worked hard, now they want to retire, or is forced out. What happens? Do you have a backup plan for that? Okay. So for many business owners, business is life. You have goals. You have personal goals and business goals. Your personal goals: paying down the mortgage. You have a certain standard of living that you want to maintain. You have children, future of the children. Could be retirement planning, saving, dreams. Everybody has lots of personal goals, and that's why we work or run businesses. There's also business goals, operations, R&D, new markets, growth. It's contributing to the community, leaving a legacy. There are certain accounting measures that need to be in place to achieve these goals. But when this risk event, when one of these events happens, it has a huge impact. In reality, when you're healthy, you're working, everything's fine, income is growing, savings are growing, debt is, going down, and expenses are maintained. After a risk event, typically, the expenses increase, debt increases, savings decrease, and income is actually a question mark. Will there even be an income to sustain not only the business, but you as business owners, and your families? So these are some of the considerations that you need to look at. There's far-reaching impacts. There's financial consequences, and the business it may sell, become a casualty. Typically, if there's a disability occurs, it takes about 3 years before somebody's fully functional. Like, that's what the stats have been saying. So let's look at some of the stats for some of these risk events. And these are, from the Canadian Cancer Society, Heart and Stroke Foundation. 1 in 2 Canadians will develop cancer. Okay. Next, 9 in 10 Canadians have at least one risk factor for heart disease or stroke. Each year, more than 50,000 Canadians are diagnosed with heart failure. Now, if we could just stop there, these are just stats. To bring it home, think about this. Do you know of, or have you heard of someone who has passed away prematurely had a had been diagnosed with cancer or a heart attack. Chances are you do. Normally we would do this in an open room, and usually 80 to 90% of the hands go up. Now, what about just in the last year? Again, chances are most of you know of somebody. I personally, in the last 4 months, have known at least 5 individuals who either know, that were known to me, or I know someone who knew that have actually suffered one of these risks. Now that is reality, okay? And the bad news is these are pretty grave stats. Good news, you can actually take action and plan to reduce the impact. So if a risk event happens, what are your options? Okay, where will the money come from? Now there's 2 aspects to managing this risk. There's having the structure in place, the legal agreement, who will get the shares, and then there's the funding. Today we're talking about the funding part of it, because you'll need to still either run the business or buy somebody out if one of these things happen, or train a new employee. So where will the money or the funding come from to be able to do that, to maintain your lifestyle or maintain the business? Now there's the option of selling business or personal assets. Not a very attractive option because it won't last very long. It's a short-term solution. And what if you run a service business where there are no assets? I mean, there could be intellectual assets, but no tangible assets. And would you have to do a fire sale? Would you get a fair value for that? You could borrow. Again, sometimes approval is tough at the best of times. What are the chances in a crisis of getting approved or borrowing from somebody? You could rely on family or friends, but do they even have the capability of lending to you? You can use the existing cash in the business. Does the business even have enough cash? How long will it last? What's the burn rate? There are certain government benefits, but will you qualify for them? It's great, like we're going through a pandemic, government's providing lots of support. But if it's an individual situation, what's your backup there? There's EI, which has, $573 max per week. That's where you top out. And that's taxable, and it's a short-term solution. CPP, in case of a disability, it's there, but the maximum funding or maximum benefit is around $1,400, and again, it's taxable, and it's very tough to qualify for. And then you have WCB, again, short wait, decent coverage, but what if the injury doesn't take place at work while you're working, right? What if it's an illness? Can it be directly related to your business or your operation of your business? I know the firefighters had, I believe it was a 10-year battle, court battle, before they got some coverages with WCB. Could set up a GoFundMe page. I mean, that's, I'm seeing more and more of that propping up, but then that's totally out of your control. The best option is having some sort of the funding being provided through an insurance strategy. It's proactive, you're in control, and it's the most cost-effective way of funding, providing funding if a risk event takes place and you need resources. Okay. So looking at some of these strategies is what will be the remainder of the presentation. We'll focus on looking at some of these some of these strategies. These strategies, again, there's 2 aspects to it. There's the legal framework or the structuring of the strategy, and then there's the funding portion. Okay, so now I'll turn it over to James to discuss the 5 strategies that, along with insurance, can give you some sense of control and peace of mind over the unexpected. James, over to you.
Thank you, Manny. So we're going to talk about some proactive options around different strategies to provide peace of mind, to kind of cover you from the risks that we just went over. The first one is personal protection for business owners. And this is really important because the number one reason why most people have a business or have a career in the first place is to provide for their family. So the number one thing that we should look at is making sure that anything that we do, we have the protection in place for personally. There's also BuySell agreements. I'll go into more detail about what that is and how it can help you. Key person protection. What happens if someone fundamental to your business, which could even be yourself, has an injury, illness, or a death? How do you protect your business and maintain the relationships with your existing employees and creditors and things like that? Also, how do you keep the lights on, the overhead expense? Every business has business expenses. How do you keep that going at a time of change? And also loan coverage, just making sure that any loans that you have, current and future, are protected, or if someone lending to you needs collateral, it's already in place so that you don't have to stumble around at the last minute to make sure that you get the funding that you need. So the first one is a buy-sell agreement, and there's a lot of different topics out there about what it actually is, but simplistically, it's a written agreement that provides for the sale of a business interest following a 4D event. And remember, those 4D events are death, disability, divorce, and departure. 2 of them can be covered by insurance. The other 2 you should have in place as well, just to make sure that there's no unexpected change in shareholders, such as a spouse or a child that has no interest in the business, so that they may make changes that may not necessarily work in the business favor, and or creditors becoming a shareholder. So there's things that you can do in a buy-sell agreement to make sure that if any of those events happen, that you're protected and you know exactly what will happen and how the shares will move around. It also establishes upfront buy-sell rules for clarity and fairness. And some of the 3 common elements of a buy-sell agreement are a triggering event, and that's realistically the 4Ds again. Departure could be by choice. Someone may just want to change careers, by retirement, or maybe they did something that's against the business ethics, and they may need to be moved out. So there's all those different things to consider. And what happens if the spouse or child of one of the shareholders or owners or even key person has the rights to those shares, and they may have no desire or experience to work in the business? So then who owns those shares, and how do you continue the business to make it fair for everyone? And the valuation method is also very important. There's fair market value, there's a fixed amount, and there's some type of formula. So realistically, you can put any type of formula in there, or based on fair market value at the time. And I was doing some reading when I was putting together these slides, and I actually found a case where a business started, I think it was over 20 years ago, and they put in $50,000 or $100,000 each, and they valued their business at 2 to 3 times what they put in. So it was worth $300,000 or $400,000, and that's what they put in their agreement. So it's also very important to update these agreements, because when something happened 20 years later, that business was worth millions of dollars, and because their agreement stated that it was only worth a few $100,000, that's what the amount that was paid out to the departing shareholder. And that then went through the courts, of course, because nobody want to give up that much assets. So it's really important to make sure that it's there and that it's updated. And of course, the funding strategy is also very important. Where's the money coming from? And who's going to pay for what, and how are the shares going to move around? And so it's really important just to know where the money is coming from. Of course, there's always, most business have someone who's key to their business, could have more than one person, but a key person is an employee or business partner owner whose skills and intellectual capital are so valuable that your business would suffer a financial loss if they left for any reason, illness, injury, or death. Does your business employ someone whose contribution would be difficult to replace? It's very important to think about that, and who are those key people and how are they protected? It also, having the right key person protections in place are not only good for the business, it's good for the key person to feel comfortable in that something's being done to either provide for their family or maintain their interest in the business should something happen to them, because it also keeps them wanting to stay where they are rather than to look elsewhere for better benefits and things like that. And just think about how much it would cost to replace, how much time and effort it would cost to recruit, train a new employee. And let's just say your top salesman was involved in a serious accident and won't be able to sell for months, a few months. Where's the income coming from? Where's the cash flow coming from? Can your business be maintained while that person recovers? These are some of the main benefits of key person coverage, and having either life insurance or disability income at the right time could make those assets available to recruit, hire, and train a replacement that's qualified to do what the other key person was doing, to manage and pay off creditors. This is a really big one, because quite often when a key person was the driving force of the cash flow, if a creditor sees that person's not there anymore and there's no new money to offset that loss, they could be hesitant to provide new loans or potentially even call the existing loan. So it's really important that if you do have loans or even thinking about getting loans to support your business in the future, that you have something in place. It also eases the lender's concern about your company's financial health, and that's important. And it reassures customers, employees, and investors that your business will survive. So I think these four parts are fundamental, because it keeps the idea that it's not just the key person, it's what other people believe that key person to be doing for your business, and how it maintains that reassurance to them that that'll be maintained if something were to happen to them. So this next one is the benefits of business overhead, keeping the lights on. What is it, and why is it important? Basically, what it is your income is needed to pay fixed expenses. It's quite often used for smaller companies with a few employees, or someone with like a individual who's incorporated, and all of the business expenses are coming from their income, such as a physician, lawyer, accountant, principal owner of a closely held business. So think about whose income is needed to cover the ongoing costs, and what would happen if that income wasn't there. Like the monthly bills that you have in place now, would they suddenly stop, or would they be paid from some other source of income? Like where is that actually coming from, and how can you maintain those costs on a monthly basis? And of course, the benefits of having business overhead coverage. If yourself or a co-owner become disabled and unable to generate income, the business overhead expense coverage can help you continue to run your business, pay salaries to retain valuable employees. Because especially when something happens like a 4D event, you wouldn't want to have a good employee leave because they don't feel like they're going to be able to be paid. So having this type of coverage would maintain that reassurance to them, and it covers fixed ongoing expenses. So basically, there's rent, property tax, utilities, and whatever other expenses you signed up for. So it's really important to consider this type of coverage as well, just to maintain that peace of mind. And of course, every business that's growing at some point may consider looking at having a loan. So to reduce the burden of debt, business loan coverage should be available. Now, a lot of times we have people calling us and saying, I'm applying for a business loan and I need to have give $3 million of collateral to the bank for this loan, and they're doing it at the last minute. And I think it's really important to think ahead, because I had one scenario where two business partners came, they both applied for coverage at the same time, and one of them was declined. And so what happened was the other business owner took the insurance, but now he covered his other partner's risk, so he didn't cover his risk. So having things in place prior to the need is actually, in my mind, very crucial, because you don't want to have a situation where your business is relying on that coverage, and it may not be available because of various reasons. And so that covers future financing. And if something like one of the 4Ds happens, will the lenders feel okay and maintain the loan, or will they potentially ask for full repayment should something happen? So it's really important to consider these options ahead of time, and be proactive about it, rather than waiting until you think you need it and then applying for it then. So basically, these are some of the questions to ask yourself. If yourself, a partner, or a key employee is or becomes injured, ill, or passes away, how can I reduce the impact on my business? I think that one we put in bold just because that's the number one key. It's the main question for all of this is how can you reduce the impact on your business? Another question to ask yourself is, how do I replace the revenue or ensure expenses are covered once a 4D event happens? How do I keep the lights on the business to make sure the business overhead expenses are maintained? And especially the employees, like administration type employees that don't earn your company an income but are vital to the operation of your business. And how do I ensure a fair and equitable division of ownership and workload? Quite often, what you'll see happen is if there's a couple of shareholders, they'll have something in their will perhaps that will say, if something happens to me, if it's a 50-50 ownership, then 50% of my shares go to my spouse and 3 children. And let's say that the spouse isn't able or wanting to work in the business, then the workload switches to the other owner, but they still have a 50% say in what goes on. Or what happens if your children, 2 of them don't want anything to do with the business, and the other one is working in the business and putting in that time and growing it, which is great. But how do you equalize your estate so that everyone feels like they got something from that effort? And there's some legal ramifications around that as well, because it should be even between the kids at that point in time. So how do you maintain that? And that's with personal coverage and things like that. And another question to ask yourself is, how can I ensure an income stream for my family continues where they get a fair share of the business? That's really important too, because you don't want to have a situation where you have personal expenses and the income stops, even for a short period of time, say it was 3 to 6 months, while things are being sorted out. That's why it's important to have personal coverage as well, so that while you're waiting for those things to be sorted out, then the cash flow personally doesn't stop for yourself and your family. And of course, the last question is, can I afford to leave everything to chance? And I attended a seminar myself. It was a training seminar about estate planning and things like that. And one of the speakers was a 20-year plus estate lawyer. And he said one of the things that he saw quite often is people said that they would self-fund. And then he went through all of the assets that they had. And he said that if this happened, what would happen to these assets? And quite often, people weren't in a situation where they could self-fund. because of the time, how quickly they made to sell. And so he was actually very adamant in making sure that they had some type of structure in place for themselves and for their business to maintain their family's lifestyle. And he also gave some information for us to use to kind of show people exactly how to protect yourself in those events. So the right strategy starts with an assessment. And Tony Robbins said that knowledge is potential, action is power. So to find out more about us and what we can do to help you, we'd be more than happy for you to give us a call, and we can do an assessment of your business, where you're at, and also find out how personally you're protected for some of these things. Just make sure all those gaps are filled, and also to give you peace of mind knowing that you've got the most protection in place and you've mitigated a lot of these risks. So now we're going to open it up to questions, and feel free to ask.
Okay, looks like there's nothing in the chat for questions.
Sometimes we find we get questions after the fact just because they're sometimes personal in nature. So if you do have questions, please feel free to reach out to us personally. Our contact information is on the screen, and it's also really important to get an assessment. There's no obligation to it, but what it does show you is how your business and personal strategies are in place to protect you from some of the things that we talked about. And it doesn't always mean making large changes, but just some little change.
Hi, actually, we do have a question from Rona. As a startup business, what should I consider to insure the business?
I would say to that, realistically, each business has their own unique circumstances, and it depends on the ownership structure. But the most important thing is to first find out what risk you have, because that's quite often overlooked. Like, people are so busy in their day-to-day personal lives and business lives that they may not actually see some of the risks that they have, and that's where we have the experience. Is we've seen, not just ourselves, but through our company and the people that we work with, we've seen some of these things happen and what happens with and without coverage. So it's really important to get that assessment, just to get an idea of where you're at, and to make sure that you have a full understanding of what your individual and business needs are.
Okay, well, if there's no other questions, I think that's the end of the session then. So I want to thank both Manny and James for being here with us today. It's been very enlightening. We have recorded the session, and we will be sending it out along with the facilitator's contact information so that you can follow up with them if you need to. There are many more of these sessions coming up, so be sure to check out businessinsurrey.com. And with that, make it a great business day, everyone.